Good morning, everyone, and welcome to day 2 of the CogX Festival. My name is Bindi Correa, and I'm here to host the Startup to IPO stage, where today, and I know yesterday, we're focusing a lot on scaling the brightest ideas. By way of background, I've been involved in the European tech scene for the last 20 years, so yes, I'm old. I'm a venture partner at Draper Esprit. I'm ex-Silicon Valley Bank, ex-Microsoft Ventures. I sit on the board of a bunch of startups. I also am a board member of the European Innovation Council. So I've really seen and witnessed the whole European tech startup ecosystem for a very, very long time. And it's been great just to see where we're at right now in 2021, despite the pandemic. I'm going to quote an article in Sifted, and luckily Maija, who is leading the panel just after this, is from Sifted. And what they said is last November in 2020, the Europe's unicorn startup count was 60, and since then we're now at about 70 unicorns. 8 unicorns have also publicly listed via an IPO, or we're hearing rumors of SPACs. So we've got Arrival, Darktrace, Deliveroo, and UiPath. Fintechs and French startups have done pretty well this year as well. We've seen Lendable, Starling, Blockchain.com, PPRO, Bitpanda, Shift Technology, Vestiaire Collective, Allen, and Ledger recently all reach unicorn status. We're expecting many more to IPO this year. So we've all heard the rumors about Babylon Health, who announced a SPAC earlier this month. And then we've got rumors on BlaBlaCar, BrewDog, Cabify, GitLab, and Wise. But this is what it is around the tech ecosystem. I think from a personal perspective, I've seen so many venture capital funds launch focused on different geographies or different verticals. I've seen the European Innovation Council launch earlier this year in March a 10 billion euro early stage super fund funded by the EU. We're seeing lots of government initiatives popping up. We've got Tech Nation here in the UK. We've got Tech Leak in the Netherlands run by Constantine, Startup Portugal run by Simon, La French Tech run by Kat, all to the same end, to really see what's happening with this wonderful startup ecosystem, which I know I am and so many other people are so very passionate about. So with that, we have a very full agenda today, starting with this first session, which goes from 10 to 10:45 a.m., and we will then have a break until noon. So this first session is run by Maija Palmer, the innovation editor of Sifted, and it's about Q-commerce trends leading the way. And what is this session about? Consumer macro trends speeding towards convenience, especially in the food, grocery, and delivery industries. With fierce competition popping up in every continent, what kind of business are we going to expect to succeed? I know certainly from my end, I've seen so many ads pop up here in central London, so I'm very, very excited with that. And before we bring Maija on stage, I always like to find out about our speakers and a little quirky fact. So I've kind of decided to ask the question, what life skills have you learned in COVID? For me personally, I learned to cook a lot more, and I was graduating to some really great, interesting, complicated meals. Now, our dear Maija from Sifted learned how to knit socks and drink whiskey. And I think it's up to you as the audience to figure out which one she succeeded in. And she said she failed miserably at one, but I can actually see how she would do really well at both. So with that, I take you across to Maija Palmer and Q-commerce trends leading the way.
Thanks so much, Bindi. And yeah, if anybody is wondering, I'm not going to show you the socks because the one that succeeded was not really the socks. So we'll leave it at that. But let me just introduce this panel because I have two people here who will be able to really talk about this, dig into the Q-commerce trend. And we're talking about quick commerce. So this is the extreme convenience that's suddenly popped up in all of our cities where you can kind of, order a bunch of bananas and a pint of milk and it will show up at your door in 15 minutes, 10 minutes. The competition is getting fierce. So let me introduce, first of all, from the, someone who should know this side extremely well is Milena Lazarevska, who is Global VP Commercial of Q-Commerce at Delivery Hero. And before that, she was also head of future brands at Sainsbury's. So she's kind of played to both sides of this game, both the challengers and the incumbents. And I'm quite interested to hear a little bit more about how the experience compares to being at Sainsbury's. But I mean, I think it's fair to say, Milena, that the last kind of 9 or 10 months of your life has been extremely hectic and crazy as this trend has taken off. Am I right?
Indeed, it has been pretty hectic and crazy. All good fun though, and a really, really exciting industry to be part of and to help build.
Okay, and the other panelist is Sasha Astafyeva, partner at Atomico, and you've relatively recently joined Atomico, coming from Felix Capital, where you worked with a lot of kind of consumer brands, and you've come to kind of head up the scaling consumer companies at Atomico. And of course, Atomico, the place where you have skin in this game is there's a big investment in Volt. From the Atomico side. So I'm really interested in your perspective from that VC side on kind of the crazy amounts of money that are going into this space right now and the competition that's building up and where this will all go.
Excited to chat about it. And also we're investors in Zap, which is probably a bit more relevant here. Yeah,
I'd forgotten Zap, sorry, but thank you for reminding me. But let me just to kind of put it into context for everyone, in case anybody in the audience has been hiding under a rock and hasn't noticed what's been going on. But I mean, the thing that astounds me is the sheer sums of money that are going into this space right now. So the rounds that we see, I mean, we've got Getir, which is, admittedly kind of one of the older companies in this field, but they've, now raised in excess of $1 billion, right, to do this. And the last round that they did was sort of 550 million. We have companies that have only been in existence for, a blink of an eye, less than a year, Flink, and they raised $240 million. We've got Gorillas, who, again, hardly anybody had heard of, and again, getting 285 million. And I could go on, but the rounds are huge, and there's a lot of them. So again, I did a quick counting up, and in some cities it's just crazily congested with these. So if you look at Berlin, you've got sort of 7 competitors all piling on top of each other. You've got takeaway.com, you've got Bolt, you've got Uber Eats, you've got Flink, you've got Getir, you've got Gorillas, and Milena, you can maybe tell us a little bit more about this, but Delivery Hero is going into that mix again, so it's getting even more congested. And the UK is another area where we've got sort of Zap, Getir, Wheezy, DJ, Fancy, Jiffy, Gorillas, and who knows how many more may be popping up. So I want to start with this question, which is this a little bit crazy? Is this a bubble? How sustainable is this? And maybe starting with you, Sasha, just because you've got that kind of overview, and then I'd love to hear sort of Milena's perspective as somebody who's like right in the mix trying to fight that battle. So.
Yeah, it's a really interesting question, Maija, and I think a lot of people are asking that question for sure, just because indeed a lot of capital has been invested in these companies over the last few months, and it's probably a trend that in Europe, is a few months old, but has been picked up very, very quickly. I think it's a sign of a few things. First of all, the market itself, the convenience market, the grocery market, the food space is very large in Europe. It's billions and billions of dollars worth. And during the course of the pandemic, especially the lockdowns, a lot of consumer behaviors that have emerged are leading people to change the way that they shop, the way that they consume things, the way that they get food into their house. And convenience is one of the factors that has emerged with vengeance over the last few months. And so the proliferation of these companies is a reflection of the focus on convenience that consumers have had over the last few months. And I think that's the first trend, the first consumer trend that has really bolstered focus on the space and the number of companies that emerged, the amount of capital that has gone into this. So coupled with just the sheer size of the market, it's made it extremely attractive for investors to invest in the space. And to your point around saturation, it's a really interesting question, but we think about grocery space, food space, convenience space as not a winner takes all. There are many different reasons why somebody would go and shop for food. Sometimes it's a weekly shop where you plan ahead. You go maybe to the supermarket, or you shop online on Ocado, you buy quite a lot, you stock up. Then there's the shop, which is the replenishment shop. Maybe you ran out of some things and you're in the middle of cooking, or you've got, children that demand your attention and you ran out of something, so you can't really leave your house, or, you just generally you're trying to replenish some of those items that you ran out of. Then there's impulse, and that's more, you did run out, but also the reason it's not something that you plan for. So it could be, some ice cream on a Friday night, or you're having drinks with friends and you run out of that bar of wine and you don't want to kind of leave your house. So some of those things, all of those are different occasions. And so there are many different ways to serve the customer during those occasions. And I think similarly to how we've seen it in the grocery space, where you can have multiple players on the same high street and all of them do well because they serve different customers or different customer needs. I think in this space as well, there's a chance for multiple winners to emerge for sure.
Okay. Yeah, interesting that it's not necessarily a winner takes all. And I guess the debate is just how many of those competitors can coexist and how they might have to evolve to maybe have specialisms each and so on.
Yeah.
From your point of view, Milena, I mean, how does it feel? Does it feel like this is a moment where you have to do a kind of an insane land grab because everybody's trying to sort of establish themselves all at the same time?
So we've been, as Delivery Hero, we've been in the quick commerce business for almost 2 years now. Coming up to 2 years. We opened our first dark stores, or what we call D-Marts, in Turkey. And then we are now present in over 35 countries with 600 of these dark stores. And in addition, we also partner with local retailers, whether that's supermarkets or pharmacies or other health and beauty retailers and other verticals, to deliver on their behalf. So we've been going at this for a couple years for the exact reasons that Sasha just outlined. It's a huge market. There's definitely a move towards convenience, but also we have an existing customer base and we have an existing rider base in over 50 countries around the world. So adding an additional service for our customers means we increase the value of our platform for those customers, and they treat us as the place where they can come to get things delivered to their house, and always delivered is an amazing experience. In the last 6 months, it's really heated up, and clearly many other companies and many investors are seeing the potential in this industry. And as you mentioned, I come from the supermarket and the grocery world, having worked in Sainsbury's in the UK for 6 years. And it is a huge market, and it's a market that kind of from the retail perspective is the least digitized so far. I mean, something like 70% of electronics are sold online, while in groceries, UK is one of the more advanced markets in the world, and it's still in the low double digit, now probably at like 12 to 15% sold online. So there's a big shift that is still happening from just brick and mortar shopping to online shopping. And I think we're supercharging that with the convenience shopping as well. Does it feel a bit like a land grab? Potentially. I think mostly in Western Europe, it feels like a land grab. Delivery Hero is actually a very global company. So like I said, Turkey is one of our first and largest markets, but we're in over 35 countries in the Middle East, in Asia, in South America, and we have a different set of competitors everywhere who are all seeing the potential in quick commerce as well. But it does feel a little more heated up in Western Europe, that's for sure.
Okay, and you had the advantage, I guess, of having been doing this for a while, and also, I mean, just Delivery Hero had been out there for 10 years, right, as a brand, or even more than that, maybe now, and then in quick commerce for 2. So you'd established yourself, but I still wonder whether, are you finding now with so many new competitors coming, does that make you have to do different things now? Do you have to move faster than you might have done otherwise, because this is the sort of moment?
Yeah, I think it does put an additional competitive pressure on, for sure. we like to focus on our customers and actually deliver the best experience for our customers. So really think of how we can position ourselves in this world and what's the value that we add. And as I mentioned, because we already have the customer base, we actually already have a huge pool of people where we can offer the service, and they already have our app and they're already used to ordering from us. But our plans are ambitious. We always saw this as a big opportunity, and we perhaps even cranked it up a little bit more now to make sure we do offer the service for all of our customers around the world.
Okay. Now, I want to remind everybody who's watching also that you can ask questions. So if you have any questions for the panel, please do put them in, and I'll make sure to put them to Sasha and Milena. And then while I'm waiting for those questions to come in, there's definitely a few things I'd love to dig into. One is, and this is the big question for me, is do you think these can make money? Because the competition is so fierce. Everyone is offering discounts. There's a lot of, you have to hire a lot of drivers to be able to make sure you can hit those commitments to delivering within a certain time frame, etc. So how difficult is it? And maybe, Milena, if I can put you on the spot again, first with this one, but how do you kind of think about it then with Delivery Hero? Is it a sort of maybe you have to go through a period of losing some money in sort of establishing market share, but are you hoping then to come back to making these truly profitable soon?
So we released kind of the example unit economics as we see in the long term. So let me start with that. We do believe this can be a profitable business, and there are multiple aspects that actually make it happen. So first of all, there is the unit economics of every single basket that we deliver. And whether a basket is profitable or not, it depends on how big that basket is. And we like to think of it as a little bit of a sweet spot. So most of our deliveries get delivered by bicycles or motorcycles. So it's 2 wheels, which means the amount that you can deliver on one ride is somewhat limited by weight or by volumetrics. So having that sweet spot of a basket, which is large enough to make it profitable, but small enough so that it can be carried on one bike, is kind of the ideal that we're going for. And then there is partnerships with the suppliers, especially on our Dmart and dark store side as well. So we work with some of the world's biggest brands because we sell those brands through our Dmarts. And they see this as an additional channel that is actually capturing some additional consumption occasions as well, especially, as Sasha was saying earlier, some of the more impulse consumption occasions, whether that's ice cream or snacks or drinks. We play in all categories, but these seem to be the first and the most popular ones that customers associate with quick commerce. And there is trade investment that comes from the brands to promote their brands to our consumers as well. So that bolsters the profitability too. And then just like any retail business, it's about making a store profitable, because once you open a store, there's some fixed costs associated with operating that store. There's rent, there is the employees that work inside, the pickers and the riders. And to make a store profitable, you just need to put quite a lot of orders through that store so that everything is maximized. So with growth and with actually filling up the funnel of customers in the stores and kind of aiming for that sweet spot of a basket, we do see this business becoming profitable. And I guess just another benchmark, retailers globally don't make significant percent margins. I mean, in the UK, retailers make anywhere between 2.5% and 3-4% EBITDA margins, which isn't very much at all. But it's a huge market and it's huge volume. So that translates to hundreds of millions and billions of dollars, pounds in the UK that the retailers are making. So it's not about making huge percent margins, but it's a big volume business, and even just a handful of percentage points of EBITDA margin can make this very lucrative.
Yeah. Okay. So you need to find, I like that idea of the sweet spot of the basket. So you need kind of fairly light but expensive items that can be carried on the back of a bike quite easily, right? So
on average. On average, we don't like to kind of forbid or design what customers want, because we want to make sure we serve their needs. But on average, yes, and that's why alcohol works quite well.
Yeah, but like a sack of potatoes, for example, would if everybody was ordering that would be fairly disastrous. So you want to steer towards that. And so, Sasha, bringing you in, I mean, thinking about it from an investor point of view, in what way do you think about the kind of horizon on which this becomes profitable, and how much do we sort of have to see some crazy upfront investment first as we sort of build out, but then hoping to change over into a profitable side?
That's a really great question. And I think it's a matter of how long it takes to get to that density that Milena was also talking about, because it's really about, if we think about the cost structure as, fixed versus variable, there's a variable cost structure on the actual kind of cost of goods that the customer is purchasing, but then a lot of the other costs are actually fixed. So the cost of, maybe thinking of the cost of delivery or the cost of fulfillment, because obviously that cost will decrease as you have more volume going through the dark store, but volume being key here. And I think one of the things that is really important in this market right now is because of a lot of competition in the market as well. It potentially may take a little bit longer for people to build some of that density and volume that's required to get to profitability faster. But to the extent that as we think about the steady state and where do these businesses get to when they are not only have acquired, a large number of customers in their catchment areas, but those customers are loyal and they're coming back, this is where you kind of get to the profitability stage. And I think this is where the business, to Milena's point, becomes interesting and is starting to generate cash. So the amount of time that it takes, it can take anywhere from a few months to maybe, a year and a half. It really depends on the market conditions, and it really depends on the business's ability to execute and drive volume to their dark stores.
Yeah. But do you think, though, that we will have to see some consolidation? I know we said in the beginning that, this isn't a winner takes all market, and there will be ability for, different players to coexist. But at the same time, what I hear you saying is you do need the volume, and you need the density. So ideally, in a city, you wouldn't have maybe 7 or 8 competitors, maybe just 2 or 3, so that you can get that volume and the loyalty as well.
Yeah, it is a possibility. I mean, that's one of the ways that a lot of the markets that start off as, fairly fragmented and that do depend on volume in order to drive scale and profitability, they do go down the consolidation path at some point. I think it's happened quite a bit in the restaurant delivery space as well. And there are plenty of other examples in the consumer space where consolidation has been part of the journey for the businesses that emerged in those spaces. So I think that is definitely a possibility in this space as well. But having said that, as I said before, I don't think it's a winner takes all market. I also don't think it's a space where you're going to have, 25 different companies. But having a handful, I think, is definitely a possibility.
Yeah. Okay. And I guess, maybe we can take some hints from the ones who are well capitalized at the moment, that they might be more on the acquiring than the acquired side. But I mean, that's clearly just speculation, but that's kind of how it played out in the food, the restaurant delivery side. So there's some parallels there. There's a really great question that Bindi has asked, which is about the kind of COVID bounce. And it's about kind of to what extent is what we've seen over the last year sort of abnormal, and how much of the habits that people have developed in this period, how many of those will stick with us? And Milena, I don't know if you want to start with that, whether you're seeing any changes now as we start to come out of sort of the more extreme lockdown situations, and what are you sort of building into your model as expectations for how consumers will behave?
Yes, I think we're in a really interesting position because we're present in so many countries around the world. Lockdowns have not been synchronized around the world. Countries have gone in and out of lockdowns, and the COVID cases have gone up and down in different places. And we certainly see our business fluctuate. Obviously, when there's an announcement or a lockdown, our sales absolutely spike. And when there is release, they have a little bit of a dip. But overall, we see a very encouraging upward trend everywhere. And what's really interesting is we see that once customers start shopping quick commerce with us and start getting their groceries delivered from us, they actually increase their overall frequency on our platform, including their frequency on the restaurant side. So they become more loyal customers overall for us. And that's an encouraging sign to say, this is becoming an ingrained trend. And once customers actually try it and get their groceries delivered in 10, 15 minutes, this becomes a bit of a habit. We're also seeing that customers are starting to break up their weekly shop into multiple smaller shops. I actually always draw an interesting parallel to the UK market. So in the UK, over the last 10 years or so, all the supermarkets opened their convenience fascias. So the Sainsbury's Local, the Tesco Express, the Little Waitrose, etc. And all the supermarkets saw a decrease of basket values because customers moved their weekly shops into several mid-week top-up shops. Because you can argue either way what was the exact driver, but because the convenience was there, they were able to actually not have to plan so far in advance, not have to only drive to the big store to buy their weekly shop. They could just pick up dinner on their way home from work. That's how the behaviors evolved as well. We're taking that even more to the extreme because you don't even have to go anywhere. You can just get everything delivered to your house. So why wouldn't you just break up your weekly shop and get what you want when you want it, rather than having to plan far ahead? And that's the exact behavior that we see from our customers as well. We see increased frequency over time, increased basket sizes, increased exploration of different categories. So in some of our DMarts, we already offer upwards of 7,000 items, which is the assortment of a small supermarket. This is no longer a convenience corner store, which has 1.5 to 2,000 SKUs. This is like a really, really good selection of everything that you might want. It might not be the exact item you're after, but we will have a version of the particular item you're after to go there. So we're really seeing customers shift to that sort of behavior.
And you think some of that will continue to stick around, even after it becomes easier for people to nip to the corner store. I'm just wondering what the trade-off will be, if you can walk 5 minutes and pick up something from a convenience store versus, 15 minutes to have it delivered to your door. Both are convenient in slightly different ways. Do you think there'll be a sort of balance? And
yeah, as always, the main thing that customers want is choice, and to be able to do whatever is most convenient for them at that particular time. So sometimes on-demand delivery in 15 minutes actually isn't convenient because you might be on your way somewhere or on your way home, and the most convenient thing is to get it delivered in an hour. We just want to be able to offer our customers choice, and for the on-demand deliveries, but also for scheduled deliveries, if they wanted to get something to their house, we actually offer that. It's again, in groceries, it's a little bit of a share of wallet game. So I don't think we're going to get 100% share of wallet of any individual customer. Each individual person is going to choose how they shop, where they shop for a particular mission, for a particular product type, for a particular situation. But we want to make sure that we are part of their repertoire and they consider us for as many missions possible, because this becomes the most convenient, also affordable, also great choice of items that they can buy.
Yeah. And okay, so yeah, we're seeing those trends, they are starting to become more ingrained. But coming over to you, Sasha, I think when we spoke about this a little bit in our prep call, I think you had some concerns about the level of discounting that was going on, and maybe that, how much that might be maybe masking what the people's true habits will be. And that's another factor, in addition to sort of COVID, that may make it difficult for us to see at the moment exactly what the true demand will be as things normalize.
Yeah, it's, I would wholeheartedly agree with what Milena was saying, because it's also one of the frameworks that we used internally, trying to think about the different behaviors that emerged during the last few months and how they will morph and what will happen after kind of things go back to normal. And the thesis we had is that if there is a behavior that emerged during lockdowns that is superior to the way that you did things before the lockdowns, then even after the lockdowns, you will continue doing what you had kind of adopted during the lockdown, because it is better than what you had before. And I think the convenience is an interesting kind of representation of that, because it is by virtue of quick delivery being more convenient, and potentially, in many ways better than the experience that people had before. My and our kind of thesis is that a lot of that will stick after things go back to normal. Having said that, to your point around kind of discounting, because of obviously the competition in the space and the emergence of different players in the space, and the fact that a lot of capital has been poured into marketing, and some of that is obviously manifested itself in discounts, there is some demand, I think, that maybe has been driven, that is more driven by discounts rather than actual need. And I think time will tell how that demand will manifest itself over time without the discounts going forward. But I think one thing to keep in mind, and which is why I think the businesses that are driven a lot by the consumer experience and driven by their customers actually having a great experience with their app, with the delivery, with the selection, and coming back because of that and not because they're getting a discount, are the businesses that will stick around longer. Because over a period of time, customers will vote with their feet when it comes to which apps they're using and which services they're using based on the experience they have, rather than necessarily on getting, £10 off every time that they're shopping. Because this is more a sign of the times, I think, at this point, rather than a steady state kind of a behavior that will stick around, a few years from now.
Yeah, so that kind of initial experience, I guess, will be very important. So actually getting it in the time frame promised, and maybe that's why we're seeing some of the, we've been reporting on Sifted a little bit about sort of the craziness of people just jumping in taxis with a bunch of bananas, and that in no way can be cost effective for the company. But I guess if the game is to just make sure that you satisfy customers, and if this is a particularly crucial time and this is a relatively time limited period where you have to do that, you have to wow them, then in order to establish a longer pattern. And it does seem kind of encouraging, if Milena, if you were saying that you see customers repeat ordering, and then if they order with one part of the service, then they will kind of try other delivery options as well. And that actually speaks to another question that's come in, which is just about the product roadmap, which I think would be interesting to dive into, which is is the focus on sort of adding extra services to become kind of a super app, or I guess the alternative would be just to optimize for cost and do one thing really well. It's maybe not fair to ask you to comment on that other part, Milena, because I get the sense that with Delivery Hero it's about being the super app, right, and doing as many services as possible. But I don't know if you have any thoughts on that. Was there a time when you thought about which way you were going to go in that choice?
Yeah, I'm not sure this is decided yet, actually. I think we, but also many other companies, are very much in the experimentation phase just to see what drives bigger value for the business. And we're always experimenting and always adding new services. So you mentioned earlier, Delivery Hero is now 10 years old. And of course, our main part of the business is restaurant food delivery. But we also have dark kitchens, which was a concept started a few years ago. We're now experimenting with something called delivery as a service, where we actually white label the delivery solution. So retailers can offer under their brand, they can offer the super quick delivery of items from their website. So not from our app, but rather from theirs. There's plenty of things that we're experimenting with. And we do believe that kind of offering multiple services does add value to the platform. Having said that, we want to build a sustainable business, and a sustainable business means a profitable business. So we have to focus on both at the same time. It's not an either or discussion. We have to drive growth, and that's our main priority right now. But we're always thinking, how can we actually do things better and more cost effectively in order to actually turn profit? And there's plenty of innovation that's happening in that area as well, whether it's around how we deliver, whether it's around how we actually organize the warehouses, especially our own warehouses, or the tech that we build to integrate with our local store partners to make sure that's done cost efficiently, but also for a good customer experience, so that we can guarantee the availability of items or promotions that are in the stores. We have to think on multiple KPIs. I don't think this is you either chase the growth or you chase the cost. Maybe Sasha can add on that, because she'll have views from other companies as well, but we're certainly looking on both ends of the P&L.
Yeah, it's interesting that you're being so experimental, but Sasha, do come in on that. How much are people experimenting with what the right business model is for this?
Yeah, I think it also depends on the availability of capital, right? To I think Milena's point. I mean, it's hard to choose one or the other, because in reality, consumers are, once you've acquired a customer, there's so many different things that you can offer that customer, right? So you become more of a part of their daily life, not only offering one thing, but maybe kind of offering a few different things through potentially the same infrastructure. But it requires capital, and especially at early stages. So I think, theoretically, it's a bit of a juggling act where you're trying to focus on both, on growth, and i.e. serving your customer better, offering more services to that customer, and satisfying more of that customer's needs, while at the same time focusing on driving, continued improvements to profitability of the business and focusing on the cost structure. So it's an interesting game, and probably I think that balance of how much you push one versus the other is driven by the availability of capital at the end of the day.
And what about the different, there's kind of, on a macro level, there's sort of two different business models. One is which, you have your own dark stores, and it's very much a kind of vertical business that where you're very much in control of your supply chain, and that's how you can be very quick. Or you can do the sort of your delivery service for sort of multiple suppliers, the sort of Instacart model. So I don't know, again, maybe coming to you, Sasha, but whether you had any thoughts on what the pros and cons of those were.
Yeah, we looked at a number of these and actually did quite a little bit of work as well, trying to understand the pros and cons of each of those models. I think at the end of the day, the biggest difference in our view is the difference in customer experience that you have when you're ordering from a player that has a dark store model versus a player that has more of a marketplace model. When you have your own dark store, you're much more in control of the whole consumer experience, because not only is the customer shopping in your app, but also it's your warehouses, your selection of items, it's your pickers, it's your riders, and that whole kind of full experience is completely controlled by one company. Whereas if you are more of a marketplace business, I think it's a little bit harder, because even though the customer is shopping on your app, the picking is done by a third party. The choice, the selection, and availability of that selection is subject to third party as well. The riders are often also third party. So a lot of the pieces of that experience are suddenly disjointed. And so very often that may put pressure on the actual the consumer experience and how good that is. And so it's much harder, I think, to execute, and sometimes also harder to make money and also gain a loyal customer, especially if all of the parts of that equation, they don't work perfectly well together. I think also it again goes back in our view, it's whether how you think about the kind of your strategy going forward. And I know that Delivery Hero has successfully done kind of both parts of that equation. So I'm sure Milena has a great point of view on that. But I think in our view, if you were to choose and you're just starting out, you're a startup in the space and you're just starting things up, in our experience and in our point of view, having a vertically integrated model would lead to more sticky customer proposition over time. Hence, in our view, the kind of the dark store model is superior to being more of a marketplace model.
So those have been the investments you've gone after.
Yep. Yeah.
Well, Milena, I think, how Delivery Hero does both. So again, from your point of view, what are the pros and cons, and is one obviously more profitable than the other, or is it hard to tell yet?
So we see them as complementary propositions. So the dark store is everything Sasha outlined. We can control the whole experience because we can guarantee the availability. It's our stock. We know exactly what's there. We set the prices. We run the promotions. And we build the dark stores in the exact locations that we want them to ensure the closeness to customers and therefore to guarantee the delivery time. However, these are still relatively small stores. So even if we can fit 7,000 SKUs in some of them, it's still a smaller assortment. So this is where we see the complementarity coming in, where delivery from retailers, and we kind of classify them either in grocery retailers, so supermarkets and hypermarkets, where the selection is actually 15,000 plus, sometimes 30,000 plus SKUs. or specialty local stores. So the butchers, the flower shops, the little pharmacies, they offer something quite different from what we can offer from the local stores. And while speed here is important, it may not be kind of the 10-minute and the 15-minute requirement from a customer, because if they want the exact item that they're after, they're probably willing to wait a little bit more. So we can afford to travel a little bit further in order to get that for them. So we see them as complementary models. For us, there's a little bit of a coverage difference as well. We're obviously in over 50 countries as Delivery Hero with our food delivery, and it's much faster to set up local store partnerships because the store are already there. So we can already start offering that to customers. And it requires capital and time for us to open our dark stores, which we are doing in parallel. And like I said, I think we see them as complementary value propositions. There is a difference in profitability, of course, whenever you are vertically integrated and you control all parts and you kind of have fewer players in the value chain. There is more of a profit pool for just the final player versus partnering with local stores. There's also the local store that needs to make their margin, and we need to make our margin to make that sustainable. And again, it's the same drivers as I was talking about earlier. So it's the basket size in terms of the value of the items that we deliver, and it's how many orders we can put through a particular store.
Yeah. Okay. And staying with you just for a moment more, Milena, because I think it brings us to another interesting question, which is how you will coexist with supermarkets. And I just kind of wonder what you see the sort of future, almost the ecosystem of retail being like, because what we do see is obviously some of the supermarkets are already partnering with delivery companies to take on part of that quick delivery. Some of them are doing it on their own though, and they have their extreme convenience stores and they have some delivery services. So some of them seem to be trying to play that game. I'm interested in your view on how you see that sort of shaking out, and what should supermarkets be doing more of these partnerships, or maybe that's just not something that.
So maybe a comment first on supermarkets doing this on their own. So obviously supermarkets do online deliveries, but it tends to be the next day or several days in advance. Very large minimum order values. In the UK, it's something like 40, 45 pounds is a minimum order value. So it's a completely different usage occasion from the one that we're serving. And supermarkets doing their own quick delivery services, there's been mixed success with that. So I think Sainsbury's still operates their chop service, which is within an hour, but Waitrose closed their own in order to just focus on the partnerships with the delivery companies. And I think what delivery companies like Delivery Hero as well bring is the existing rider base, the existing customer base, and we're tech companies that actually focus on building great apps and the whole customer experience. So I see the partnerships actually as winning in this case, because we each bring our own expertise, and we're more agile, we experiment a little bit more. And I guess as newer companies and availability of capital, we have a little bit more to invest and to figure out what the best business model is for the future as well.
Yeah.
So yeah, I see that as the model that continues forward.
Yeah. And Sasha, I guess on the sort of same note, but I'm interested, and we are drawing kind of towards the end of the session, so I'd like to kind of have that forward-looking piece here at the end. But just kind of what's the sort of future for you in this space in the next, let's say, year or two? I mean, it just seems like we're in this very fierce competition phase, but what do you think we'll see even more competitors coming in? Will we start to see that consolidation beginning, in the next kind of 6 months to a year? What happens next?
I think in some of the markets where, there's quite a lot of competition already, I think it's fairly difficult for a new player to emerge. I mean, so I think I would not bet on any a large number of new players emerging in some of these markets. There are still a few markets where the competition is not as fierce, so maybe that there's a chance that more players emerge over time in those smaller markets where there is still space. I think one of the things that will also start happening is that the consumers will start kind of voting more and more with their feet and picking services that they become more loyal to, driven less by continued discounts, but more by the customer experience, the selection, and just generally kind kind of their natural levels of demand that they would have for quick delivery services. And so that will kind of create more of a space to really try to understand, which of the players are building sustainable businesses that are, building also sticky propositions for their customers outside of, continued discounting. And I think that will also drive what would happen in the space from, fundraising perspective, from potential consolidation perspective, et cetera. And, as we mentioned before, there is, I think this is a space that potentially is ripe for consolidation at some point in the future, because obviously it does take some period of time for businesses to get to profitability. And as there is competition that sometimes pushes that profitability a little bit away because people are investing so much in marketing. So that definitely might happen. But I think over time, the jury, I would say, is no longer out on the fact that consumers value convenience. And so I think from the consumer perspective, these businesses will continue to be around and will continue serving customers for sure.
Yeah, but it'll be interesting to see if, as you say, we start to see who the real winners will be, and if that is the pattern that emerges in the next year or so, we start to see the ones that are able to keep customers. And so we should be looking at things like, I don't know, repeat usage, average basket sizes, those kind of things. Milena, just before we have to end, but what about you? What is the next kind of, I mean, you've had a crazy 9 months already, but what does the next 9 months look like at Delivery Hero?
I think equally as crazy next 9 months, because our growth ambitions are pretty big as to where we want to take this business. And I mean, we're building a retailer, a very tech-enabled, very digital retailer, but a retailer pretty much from scratch. And if you look in the UK, most retailers are over 100 years old. So there's a lot in this industry that we need to build in. And I think where I see the future going is us really taking advantage of the fact that we are digital only, and therefore really understanding our customers, really understanding their journeys on our apps. What is it that they come to us for to buy? What is it that they come to us for and they don't find? And therefore it's something that we can get for them and add to our assortment. And also, how is it that we actually make it quick and manageable to browse through and shop an assortment of 7,000-8,000 SKUs from our DMarts, or 15,000-20,000 SKUs from a supermarket, and make that experience quick and good as well. I mean, mobile screens are pretty small, so I think it's still a big nut for us to crack. How do you do that in a way that is quick, that is very relevant, and very helpful for customers? So we kind of almost anticipate what they're looking for when they come and buy something with us.
Okay, so that sounds interesting. So watch this space also on the tech side in terms of there being more development on some of that user experience. Right, and I am being told that we are well and truly out of time. So I really have to just say thank you, Milena. Thank you, Sasha, for sharing that. I think it's fair to say there's going to be a lot to watch in this space. So I hope I get to speak to you guys again and see where we are in a few more months' time. But at this point, I'm going to head back to Bindi, who is going to introduce the rest of the day.